Barry Zekelman is CEO of Zekelman Industries, one of the largest independent steel pipe and tube manufacturers in North America, with one plant in Canada, 22 here in the U.S. Barry, what do you make of it?
Yeah, it's an unfortunate situation we're in. I mean, 50% would be absolutely devastating. I think that cooler heads need to prevail here. I think that both countries need to sit down and talk about what's really important to each other. One of the problems here is that we're so integrated. I mean, if it would kill the steel industry in Canada, which buys all of its iron ore from the United States and U.S. mines. So we're talking about 10 million plus tons of iron ore. So it goes back and forth across the border. I think that we don't have a voice in Canada. We don't have one central negotiating team. I mean, you've got premiers from each province making their moves, and in this case, Doug Ford of Ontario is trying to protect his Ontario constituents and businesses, and making a move that is affecting all of Canada and companies there. And then we just got a new prime minister in place, and there's probably going to be a snap election, and he has a different agenda. So we're kind of a rudderless ship right now, and that's unfortunate, because I think if someone sits down with the Trump administration and really gets after what are the main issues that we need to deal with in our trade agreement and massage them, I think we're going to be in good shape. I mean, Donald Trump himself, President Trump, has said he wants to restart the Keystone Pipeline, which is 800,000 barrels of oil a day from Canada. So obviously he wants to trade with Canada with the right parameters in place. So let's all calm down, let's cool down, and let's actually sit down and make things happen. And I think Canada and the U.S. can be great trading partners for decades and decades to come.
Sure.
There's probably just some areas that need some work.
Barry, let me ask you then, because what you said was this would destroy Canada's steel industry, if I heard you correctly. Yeah. Would this be good or bad for your business in the very near term, or even in the long term?
It would be absolutely brutal. I mean, it would be terrible for our business in Canada, some of which we ship to the U.S. It would also devastate a lot of companies in Canada that are using our product within Canada. But the Trump administration is trying to send a message back to, hey, let's not throw arrows out here. Let's sit down and talk about it. I mean, they gave a little reprieve when he said, look, we're going to exclude autos. We're going to push back these duties until April. President Trump is sending out an olive branch to Canada in a way, saying, let's sit down and work this out, but don't go off, half crazy and cut off our electricity and things like that. It's an unfortunate and delicate situation that we're in, but it would be very, very tough on our company.
But so you have one plant in Canada and 22 in the U.S., is that right? So I take your point that it would devastate the Canadian aspect of this, but what would it do for the U.S. business in the medium to long term? Would there be a benefit? Would that activity, just talk us through the possible upsides, if you see any, or the downsides, if you think those are more likely?
Yeah, so for my 22 plants in the U.S., they don't all produce the same thing. So it's not like for like, very different. And the imports of my product that we're talking about from Canada into the U.S. are relatively small. So, I mean, it would affect the U.S. market a bit. We would absorb some of that in our U.S. plants. But the bigger problem is if you drive up the price too much in the U.S. and we don't address other goods, we're actually in a worse position. So in other words, there are already countries that are paying 25% duties on steel coming into the U.S., steel pipe in particular, Vietnam, Taiwan, Oman, the UAE. Those duties aren't going up. And our steel prices are rising in the U.S., which they should. I think they were at too low of a level, but I'm competing against product that is being, laundered through other countries, Chinese product, Indian product, Russian product, Iranian product, brought into our countries, and those duties aren't going up. So I'm actually in a bit of a disadvantage until we actually address those products, raise duties on that, or block them out with quotas, and or put higher duties on that on derivative products. So it's an all-encompassing play here, right. But it's walking a tightrope.